In our last video, we showed you how we scored a quick 24% gain on just a 2-day hold of RNDR. We also showed you how we scored a quick 15% gain in a swing trade of AGIX on the first half of the position. And in this video, we're going to show you what's on our radar right now, what's hot. So stick around so you can catch the next big winner. We're also going to dive in and take a look at the second half of the position of AGIX, where it's at now, and how you can take advantage of it to potentially score some profits. Every day we scan the market looking for the hottest relative strength cryptos, both new and emerging relative strength. And right now on our radar, one of the hottest setups we see is CFX. CFX is a recent leader. In the prior bull phase, it was one of the top relative strength cryptos, and it did enter into correction mode about mid-April and dip below its 50-day moving average. But notice how the price just consolidated right below the 50-day, never went much below it. And now over the past week, we've formed a tight consolidation, prices back above the 10 and 20-day moving averages, with a tight consolidation just below the 50-day moving average, this red line right here. And today, we're actually seeing a lot of relative strength intraday with increasing volume, strong volume today. So we've got several things coming together here to make this a great setup. And this is actually a setup that's on our watch list for the Morpheus crypto service for potential swing trade entry. If you're a subscriber of Morpheus Crypto, please check the trade alert that we sent you this morning, which contains our exact entry price and our stop price. Next up is KAVA. In our last video just 2 days ago, KAVA was at $1.01, so it's actually rallied 10% just in the past 2 days since we gave you the heads up on KAVA. However, this is a relative strength crypto, but I want to show you an example of sometimes a top relative strength crypto is not necessarily automatically a swing trade setup, because this does have relative strength. Notice it's been rallying on high volume, which we want to see. It's above its 10, 20, and 50-day moving averages, which are all pointing higher. So it's got relative strength and it's got the volume that we look for. However, we're looking at the daily chart. We don't like the risk reward of this setup, because notice the prior highs. We've got resistance back here all the way back to January, and also again in March, right around this level 113 up to about 122. So because of that, there's a lot of resistance overhead. We don't have a very good risk reward. In other words, the distance we would have to have for a valid stop price is too great compared to potential profit due to the overhead resistance. So we're still keeping this one on our radar because we do like the relative strength. However, for this to be a valid setup, we'd ideally want to see the price action go sideways for at least several weeks, form a tight consolidation, which should form kind of a handle pattern here, of a cup and handle type pattern, and then a breakout above the resistance. So we're going to keep this on our radar, but it's not in play right now, KAVA. Next up is RNDR. This is the crypto that 2 days ago we pointed out we made a 24% gain in 2 days, buying right here on the move off the 50-day moving average and selling into resistance near the prior highs. Now, we took the profits quickly. However, we still like the relative strength, so we've been looking for a bit of consolidation to form a tight sideways range here for several weeks, or potentially a pullback that could give us another low risk entry point. And actually what happened was 2 days ago, we had a breakout attempt after just 3 days of consolidation. We had a breakout attempt and rallied to a new swing high all the way up to about $2.96. However, the breakout failed and we formed a shooting star, a candlestick pattern, which is a bearish reversal pattern on big volume. Now, failed breakouts are often a bad sign, because what happens is people who bought the breakout get trapped, and then that attracts more selling interest, and then that attracts short sellers. And often when you see a failed breakout, within a few days later, the price action is much lower. So we don't want to see these failed breakouts. However, that being said, RNDR continues to hold near the highs, and it seems to have absorbed so far the overhead supply from that failed breakout. So definitely keeping an eye on RNDR. It is one of the top relative strength cryptos in the market right now, one of the few cryptos that's trading near its highs. TRX is a brand new entry to our relative strength watch list. Just 2 days ago, the price action broke out above a very lengthy multi-month base of consolidation, broke out to a new swing high on increasing volume, so the move was confirmed by volume. And while Ethereum and Bitcoin have moved sideways the past several days, TRX has just been trending steadily higher, a very clear-cut sign of emerging relative strength. So TRX is definitely on our relative strength watch list now. However, like we mentioned before, we need to have a valid entry point for a low risk buy point in a swing trade. We can't just buy it because it's breaking out. So ideally what we want to see here is potentially a bull flag pattern form off of this move, which would give us a potential entry point, or a pullback. If we get a pullback, this 0.073 level, this horizontal line, that's the prior highs from back in February. This prior level of resistance should now act as support. That's one of the most basic rules of technical analysis, is that a prior level of resistance becomes new support once the resistance is broken. So if we get a pullback to anywhere near this breakout level, that would be a very low risk entry point for us to take a shot at TRX. So it's too early to look at an entry point now, but definitely keep an eye on TRX. It should be on the top of your relative strength watch list right now. And again, if we spot a low risk entry point, we'll send a trade alert to paid subscribers of Morpheus crypto service. The last altcoin on our list here is AGIX, and we want to revisit this. This is the trade we talked about in our last video where we scored a 15% gain in just a few days. We bought the move above the 10-day moving average and sold into strength of this May 19th breakout when we rallied, blasted through the 20-day moving average, and we sold into strength near the highs. Now, since then, the price has actually pulled back. For 3 days in a row, it's pulled back, and we're now sitting right at convergence of the 10 and 20-day moving averages. Now, this should be a valid level of support now, but what we don't like is that the price action did retrace steeper than it should have. We've retraced most of this gain, which is not a good sign because there's a lot of overhead supply. So the breakout could fail. And that's actually one of the reasons that we also take profits quickly in this type of market. If we're in a raging bull market, we look to let profits ride longer and maximize the profits as long as we can. But in this type of market condition, we're looking to sell into strength, take profits quickly, and then reassess. So with AGIX, we actually only sold half of the position. We're still holding the second half. Now we're actually right near the break-even level on the second half of the position, and we're going to be raising the stop to just below the low of this candle. We wouldn't want to see the price action go below that, or we'll stop out. That being said, if you're not already in this trade, you could potentially have a very high risk reward, high risk as well, but higher risk reward, because you could keep a very tight stop with an entry point right near this level, a very tight stop right around, like I said, just below this candle. So right around 25.5, about 0.255 level would be a decent stop area. So you'd be risking a small amount for a potentially significant profit. If we rally back up even just to test these prior highs, you're looking at about a 8-cent gain for a 1-cent risk. So, that's a very high risk reward, something like 7 or 8 to 1. So it's a high risk reward, but also we don't like the fact that it's retraced so much. But keep an eye on AGIX. If we do see any strength in the market here, in the altcoin market, AGIX could easily rip right back up to that prior high. Finally, let's take a quick look at Ethereum and Bitcoin as proxies for the overall market. When we last looked at Ethereum, it was trading in a tight sideways range for several weeks. And well, guess what? That's what's happening now. Nothing has changed. Been in a very tight sideways range for the past 2 days, holding right at its 10-day moving average. Again, the longer this tight sideways consolidation continues, the more powerful the eventual breakout in either direction. Now, the interesting thing about this is that even though we've got Ethereum moving sideways for the past several weeks, we've been scoring profits by looking for cryptos with relative strength. For example, TRX trending higher, steadily higher over the past 2 days while the price action is sideways. RNDR is another example. So these are the types of trades we're looking at, and that's why we trade altcoins of relative strength versus the benchmarks, unless we're seeing a steady trend in the benchmarks. So let's go ahead and take a look at Bitcoin as well, see how it compares to the Ethereum chart. And here we go. Bitcoin looks very similar to Ethereum, also in a tight sideways range the past few weeks. Although we could say that Bitcoin has been showing relative weakness, slight relative weakness to Ethereum. It's actually below its 10-day moving average right now and closer to the bottom of its range. So it does look a bit heavy here. A bit of selling pressure that would take it below today's low could spark a wave of selling that takes the market lower. And if that happens, we'll take a look at where the next support levels are in Bitcoin. So again, just to recap, on our radar, you want to keep an eye on CFX, KAVA, RNDR, TRX, and AGIX. That's what we've got on our radar. And for those of you that are new to Morpheus Trading Group, welcome. Every Monday, Wednesday, and Friday, we put out a crypto analysis video where we look at some of our top relative strength plays we're looking at. And if you're a paid subscriber of Morpheus Crypto, then we also share with you our actual entries and exits, along with lots of educational commentary in our chat room. So find out more at morpheustrading.com, and we'll see you in the chat room and see you in our next video.